How bad can things be if NASDAQ, technology, and communication services sectors are all near record highs? We will also look at recent trades we did for Apple, Microsoft, Google, and Meta. Gold miners are given a warning to gold, and this is a very interesting situation. Oil is attempting to bottom at major support as things could again flare up in the Middle East. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, November 10th, 2023. As always, hit the like button, subscribe to this channel, share this video. These actions are exactly what keeps this channel going, so please don't forget to do them. And if you're a subscriber, stay tuned. We will cover many stocks and various securities, such as Bitcoin is going to be covered in this edition of members only section. We will also cover many ETFs, Treasury bonds, as well as Muni bonds. All of a sudden they're picking up, so not everything is dead in the bond universe. Emerging markets, various foreign markets, as well as large cap stocks, and many of the small cap and various speculative stocks such as Firm Holdings, Car Gurus, Rush Street Interactive, that's a gaming firm right there, as well as gold related. So stay tuned for that. If you are not yet a subscriber, consider signing up by going to MasterChartsTrading.com. There is also a link in the description. Throughout the presentation, I'll be using my proprietary MasterChartsTrading.com price action indicators. You can see them on this chart. There's green, blue, red, and yellow line. They're available for trading view, and they can be on your chart. All you need to do is to get a free trading view account and sign up on my website. Okay, let's get started. So first, I want to kind of get started a little bit differently this week. We're looking at NASDAQ QQQ. So first of all, let's look at it on the weekly chart. There is NASDAQ on the weekly chart, QQQ. And record highs, well, they are 52-week highs technically. Record highs are still back from November of 2021, actually, right here, 2021 for NASDAQ. So we're approaching 52-week highs for NASDAQ. We're super close to 52-week highs for NASDAQ. So in my mind, when something is at 52-week highs or very close to 52-week highs, it's a good thing. That means people want it. And in fact, people are willing to pay, large amounts of money for whatever it is they're buying. In fact, people have not paid this much money for 52 weeks for a whole year prior to this. So how bad can things be if people want to buy NASDAQ? And this is a technology-heavy index. So again, in my mind, this is a good thing. And if we hit 52-week highs, record highs are not that far. We can look at it as a can draw a line. I'm gonna put a horizontal line. So record highs are, I'm gonna put how many percentage point away are they? They're 6% away. It's not that much. If you notice that last week, not this week, but last week, we moved 7% in 1 week. So theoretically, this could happen in 1 week. We could break to new all-time highs. Okay, so just to, I'm trying to make a point here. So yes, there is all kinds of scary stuff in the world, such as, United States elections coming up, and there's just chaos in the electoral field. There is Israel versus Gaza war. There is Ukraine war that's still going on. There is China president or comrade Xi is coming to San Francisco. I live here very close to San Francisco, so yes, it's going to be chaos here too. But overall, we have stocks nearing all-time highs. How bad can things be when that is happening? So this is just something to keep in perspective. S&P 500 is a little bit further away from records, but nevertheless, right now we're looking at S&P 500 on a weekly chart. We're pretty close to 52-week highs as well, and then record highs are not that far off. Record highs, I mean, it's a testament to many things, but one thing is a resilient economy. People have money, and people are buying stocks, meaning that people believe in future potential of stocks. Even at all-time highs, people still want to be buying them. So this is just something to keep in mind. On more granular level, right now we're looking at S&P 500 on daily time frame. Daily meaning each candlestick is a day's worth of activity. We broke above this previous highs from October today. So notice I drew in this dotted line. Today we broke above those levels. So we're now at the highest level actually since late September. All right. And once again, the 52-week highs are not that far off. 52-week highs are right there. We made them on July 27th. All right. And since then, we're just trading in this downward kind of wave-like pattern. And oh my God, I have heard everything from the end of the world to people just giving up on stocks throughout this few months of trading. And all of a sudden, in 1 week, notice we had a huge candlestick here from last week. We basically negated most of that, and then this week we followed through. Yes, we had a big bad Thursday here. There's the big red candle, but we more than made up for that, and we actually made a new high above previous October highs, which is important because it opens the door towards further move higher. Now notice again on this chart there is this green line. Okay, so green line will provide some sort of resistance. I don't normally use it. I usually use it to exit certain positions. So for example, if you bought here in April, then I would have taken some profits here in August and maybe again in September. But it will provide some resistance. Okay. So that line is at 44.65. It's literally like less than percentage point away. We're currently at 44.15. So we're like, let me see, it's like 0.9, about 1% away. But if we go over that line, I think 52-week highs are almost a guarantee at that point. So we're looking at next week and maybe a few weeks later to see if we can break above that resistance at the green line and then break to 52-week highs. And then this is a 52-week highs, and this is a weekly chart from July 24th of this year, July of this year. And there are the records from 2022, January 2022, late December 2021. If we, just look at this chart in a very long-term kind of fashion and sort of zoom out and just look at this pattern here. I'm going to draw in this pattern. So we have an impulse move higher, a deep pullback, and then another move higher. Okay, so if we break above this previous highs, then we can expect a movement of about the depth of this pattern. Okay, this pattern that I just drew in, the bottom from October 2022 lows to the top of December 21 highs to January 2022 highs, and sometime in the hopefully not so distant future, if we break above those levels. So this is what I've been showing again. This is about 1,000 point depth of this pattern, and if we break above the previous highs, especially on weekly basis, if we close above previous highs on weekly basis, like on a Friday, then a move towards S&P 500 6,000, which is about 27% above previous records, is very, very possible. When? Within a year, I would say, maybe a year and a half or so. So into 2024, late 2024, possibly early 2025, provided we break out above previous record highs. Okay, this obviously hasn't happened. So let's look back at our earthy stuff and just look at some of the other sectors that we're trading, or at least are important to the health of the market. And the reason why I started with QQQ is because a lot of stocks are composed. So for example, XLC, communication sectors, communication services. So Meta or Facebook and Google comprise about 50% of this sector, XLC, communication services sector. So it's very close to 52-week highs. Yeah, it's not close to all-time highs. All-time highs were in September 2021. Nevertheless, we're super close to 52-week highs. Very, very close. It's one of the closest ones. So some of the stocks within there are Meta and Google. So let's look at Meta and Google. And we have indeed traded Meta. This is Facebook Meta. So not recently, because it's been so strong. So the latest, and this is an actual alert. I sent it out to my subscribers in February of this year, 2023. February 2nd, 2023, alert was sent. Notice this big gap. And all I needed to know is, did it close above my blue line? Okay, this blue line is what I really needed to see. It did indeed close above that line, and we're basically just buying at this point. It went on a tear, okay, a little bit of pullback, and now a new 52-week high, if I'm not mistaken. Actually, I think this is an all-time high. Let me look at it on a weekly chart. No, it's approaching all-time highs, but definitely a 52-week high. So if you bought here in February and you did nothing, you just held it, that's a 65% gain. And according to this chart, you would have held it because our stop would not have been hit. Our stop is at the blue line still. So we're still far away. You may have taken some profits here, for example, here in August, possibly in late October. But overall, you should be still holding it. So if you're holding Meta, I would continue to hold Meta, also known as Facebook. Within communication services, we also have Google. Google also, we traded it. There's the alert back on 27th of April of this year, actual alert to my subscribers. And once again, you would probably be still holding it because our stop at the blue line has not yet been hit. Not so long ago, you were up 31%, but if you held on, you're still up 23%. Google. Okay, so we can also look at on the weekly chart. It's also just hit 52-week highs. So once again, how bad can things be if people are looking for stuff on the internet? Okay, that means they have time, they have energy. Everything seems to be working. Not things are not that bad. Okay, so look at the quote-unquote bright side of things. So Google, another pretty good trade. Hopefully you're still holding. The other sector that is also near 52-week highs or approaching 52-week highs, or XLK, is not at 52-week highs. It is at all-time highs. Okay. In fact, this is a weekly chart. Today, XLK, technology sector, closed at all-time highs. So previous all-time high was made briefly here on July 17th, but today, on Friday, we closed at new all-time highs. Okay, within this XLK, within the sector XLK, we have two major companies, Microsoft and Apple, comprising 50% of this sector. And we will look at both. Here is Microsoft. So Microsoft also hit a new, I believe, is either 52 or all-time high. 52, actually all-time high. Yes, Microsoft just hit an all-time high. So yeah, people need software. All right. This one, so you notice that this arrow is purple. That means I personally did not send an alert out for this particular security. However, since many of my subscribers have my indicators for TradingView.com interface, they probably bought it. And if you bought it on the signal which occurred here in March, and the signal was close above this blue line, that's all we really needed to know. Held on through this little dip, because actually we didn't even hit the blue line. That would have been our stop. And now at new records, 34% gain. Again, congratulations. And finally, I wanted to look at Apple. So Apple, back here, notice again, purple arrows means I didn't personally send out this alert. However, again, if you had my indicators, you would have been able to get in back in March of this year for a huge run. Apple, also, this is an all-time high back in July of this year. So once again, how bad can things be if people need computers and iPhones? Demand is high. That means that things are pretty good, right? However, this recent trade alert was sent on October 23rd. I would be buying Apple at this point. And notice how it nicely just went, goes higher. So I had a subscriber tell me that basically he paid for my services with this one trade. I believe he was trading options. So very quick, nice profit. Congratulations. And I would continue holding Apple at this point. I think Apple can easily break to new all-time highs and take the stock market with it. So to conclude, be kind of more open-minded and be open-minded to better than expected outcomes. Yes, you can say, as they say, broken clock tells the time correctly twice a day. So if you're saying that things will be, gloom and doom, eventually you will be right. However, I think that objectively speaking, stock market is reflecting strong economy, both in the United States and worldwide. And despite all of the risks, despite all of the headwinds and pretty scary stuff that's going on in some parts of the world, by and large, things are not that bad. So let's keep optimistic outlook and keep an open mind once again towards a better than expected outcomes. Let's switch gears and look at dollar. So dollar currency index broke out into a new uptrend for the dollar right here where I'm hovering on 26th of October. How do I know? It closed above the blue line. How do I know it wasn't a downtrend? It closed below the red line right there on the 12th of January of this year. Okay, that's really all I needed to know, and very easy for people to understand how to trade with the trend. If the stock closed above the blue line, the trend is up. If the stock closed, well, in this case, this is a Forex. So Forex is traded between blue and red line. So Forex, if we close below the red line, then trend is down. For stocks, we use the yellow line as a trend setter on the downside. I put in this projection. I'm clicking on it right now. It's this thin line with blue circles. So I put in this projection on October 20th, and so far it's been pretty much following it about right. So we broke out into a new uptrend for the dollar, and now we're pulling back. We're probably going to be bouncing around a little bit. we may or may not pull back as deeply as I expected, because notice the reason why I expected this because I was projecting my indicators forward into the future. So there is still a possibility we might pull back, but recent action for gold is somewhat worrisome, and especially gold miners, to which I'll get in a second. Why do I even cover dollars? Because gold is traded in dollars. So here it is again, XAU gold divided by US dollar. So the bottom part of this equation, dollar, which I just showed, is getting stronger. It's now in an uptrend. All right. So in this equation, in this fraction, US dollar is on the bottom, and if it gets bigger, it will pull this currency pair lower. All right. So sort of what's been happening is just that. Gold sort of topped out here on Friday, in late October, and it basically has been pulling back as the dollar has been strengthening further. So I am from purely looking at this chart, we're looking at it and we can see that the gold just landed on this blue line. So technically speaking, gold is oversold. And notice what happened before. Gold bounced. This was a buying opportunities to buy around the blue line. What I'm kind of worried about right now is looking at gold miners. So we're gonna be looking at GDX gold miners. So gold miners have actually closed. Notice what happened today. We closed below this yellow line. This means, in my mind, that gold miners are now in a downtrend. All right. So why is it that gold is near all-time highs? Let me show you. This is gold. Okay, so I'm just gonna get rid of all of this stuff. If gold is very close to all-time highs, these are all-time highs, just slightly higher, all right, while gold miners are breaking into a new downtrend, all right. So this kind of divergence gives me pause, and I start to ask uncomfortable questions, what they sometimes say. I don't like it, to tell you the truth. Usually stocks of a particular industry or industry or industry group, they lead the commodity. So in this case, we have gold, and we have gold miners that are actually doing the opposite of what they should be doing. Gold miners should be near the records, but they're not. They're actually getting close to 52-week lows. You see, so GDX, we're kind of getting close to 52-week lows. You see what I'm trying to say? So this is incongruent, and I don't really like it. So I am urging extra caution right now with gold. I would be kind of wary of buying it here right now, and I want to see what's happening. Maybe this surge, because this surge started when Hamas, terrorist organization Hamas, invaded Israel, and this surge, I think, was due to flight to safety, and this was despite somewhat stronger dollar than expected. So now the dollar is in an uptrend, perhaps normal correlations are going back in force, and people are like, well, we have very strong dollar, why do we need to buy gold? We need to be doing the opposite. So perhaps this is what's happening, and perhaps that's what's happening. The reason why we have gold miners are actually pushing towards the lows. So once again, I would be kind of extra cautious with gold, and I would be just watching it for now. Finally, I want to wrap up with oil. This is light crude oil futures, United States mark. So on this chart, we can see that oil started its new uptrend on August 31st with a breakout above the blue line. Before that, we had oil going down. You can see actually alerts to sell it short. And oil kind of bottomed out after multiple attempts to break down and then rallied. So a breakout so far started here in August 31st. And so far it's been pretty good. Latest alert, I actually sent it out right there on the 25th of October, but it's not doing exactly what I said at all, what I was expecting at all. However, notice that what's happening right now is that we're trying to bottom around this red line. So if indeed we will hold around the red line and then rally, that would be an indication that so far we haven't really resolved whatever issues we were having with oil supply, and possibly more oil shocks are in the future, especially if the war in Middle East begins to, strongly affect oil shipments, especially in the as I said, Gulf, in the Strait of Hormuz around the Iranian coast. Lots of oil passes through that area. So if that passage closes, that's 20% of world oil that will be pulled off the market. Oil could skyrocket to like 150 easily. But so far, perhaps this is the reflection of kind of easing of tensions, and it would be like, to me, I would rather see oil break down below this red line, but we need to be objective. And if we don't break down, if we hold the support here around $75, then and then rally, then that means that we will still have things underneath the waters that are going to be affecting the oil supply and demand. So stay tuned for that. We'll see if we could figure out where oil is going. If you are ready to sign up for these indicators and for my newsletter, so I have indicators, these lines in the chart, once again, that are available for TradingView.com. You can have a free TradingView account. Once you sign up on my site, I will open the door for you on TradingView.com. I also have a newsletter, which I send out daily alerts on various securities. So, for example, this week I also send out a weekly members-only newsletter and weekly members-only videos that describe various securities. For example, this week we will cover all of these various stocks, such as Bitcoin, emerging markets, Boeing, Cisco, Carvana, Eventbrite, as well as some of the gold-related ones. The best deal, of course, is to get both indicators and newsletters at $59.95 per month. I think it's a great deal. Again, please don't forget to hit the like button, subscribe to this channel, share this video, and thank you for watching, and have another great trading week. Bye-bye.